Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. There's a lot going on in the aviation industry. So far this year, 2 local airlines have collapsed. First Bonza, then Rex. Domestic economy airfares have now risen 12% in the past couple of months since Regional Express, Rex, went into administration. A new white paper for aviation has outlined a blueprint for the sector to grow over coming decades. Meanwhile, there's ongoing talk of an IPO for Virgin Australia. They've been going on forever, it seems. Air India has flagged plans for a major expansion of its flights to and from Australia in a move that should bring greater competition to the sector. And Qantas continues along its path of mending the company's reputation with customers after announcing a $2.1 billion annual underlying profit, which was down about 16% from last year. So what does it all mean for the industry broadly, for Australia's national carrier, and for investors in the sector? Remember, this is general information only, and you should seek professional advice before making investment decisions. Jakob Cakarnis is a Director of Equity Research at Jarden Australia. Jakob, welcome back to Fear and Greed.
Thanks for having me, Sean.
So, plenty has occurred since we last spoke. Let's start with Qantas. It's the biggest. On the financial side, how are they going?
Sure. I think Vanessa and the team delivered a great FY24 result. I think, like you noted, it was down from the highs of the prior year, but I don't think, Sean, will reclaim those levels of the unwind post-COVID-19 when we had plenty of savings to plough through, and we had the revenge travel theme and people keen to get out and see the world after being closed up for the best part of 3 years.
Okay, what about reputation-wise? And I'm talking with customers now.
Yeah, I think it's still a path to go. I think Qantas's investment in the customer, we've seen changes to Qantas Frequent Flyer program with Classic Rewards Plus. How I would talk to it and how I think investors in the listed equity market would think about it is maybe a score in the Bs, if you like. We're not quite at A+. We're not quite yet at global premium standards, but definitely much better than where we're hearing about a lot of the frustrations from customers and a lot of the noise as we came out of that COVID period.
And what about the view of the boardroom? So last week, I think it was, the Future Fund came out with the release of their proxy voting across all companies. And I think, if I'm right, if my recollection is right, they were one of many who voted against the re-election of some of the directors. Do you think the board has managed relations with some of the big investors?
Sean, we're in an interesting juncture at the moment for Qantas's board. John Mullen's coming in. John has a fantastic reputation in corporate Australia. I'm sure you've spoken about companies that he's on. I mean, just as an example, Telstra, Treasury Wine Estates, Brambles is another great example. And how I would talk to John's reputation is an astute capital manager, but also very good at keeping management honest and accountable. And I think if we were to contrast that maybe to where we've been for the last few years, I think it's very difficult with a strong CEO personality like Alan Joyce, and his command seemingly over the board, in hindsight, made it very challenging for them to ask the right questions, which I think, as you note, the Future Fund are highlighting in their acceptance of remuneration reports and the re-election of directors. There is an account that still needs to be held for some of those mistakes in times gone by.
Okay, so put all that together, what's your rating of Qantas in an investor sense? And I must hasten to add to all our listeners, this is not an investment podcast. Always seek your own professional advice. But Jacob, how do you see Qantas?
Sean, we're approaching all-time highs for Qantas in terms of absolute share price levels. So we're actually up right near those levels that they got to just before COVID struck, which is around that 740 mark. So it gets harder now for the management team to deliver into expectations. I think one thing which we discussed last time in Qantas's advantage is its valuation. So the metrics that we look at, either EV/EBITDA versus other international airlines or its PE, are still depressed relative to where it would trade historically. But I think in terms of sentiment and belief in what the company's delivering, we're back almost to all-time highs. So it's delivery on 3 key things as I see it. Firstly, making sure that there's no air pockets in demand at the moment. Obviously, we're going through an economic cycle here. We've got restrictive monetary settings probably versus the relative rest of the world for the time being. The second one is, how do they run through that big CapEx plan that they've got to replace their fleet? And then finally, I guess a key part that you need to believe in from here is whether Project Winton actually gets off the ground and gets delivered as we get out to 2027 and 2028.
Sorry, just explain that project.
Sure. So Project Sunrise is the point-to-point travel for Qantas, which seemingly is going to open up the rest of the world for Qantas. There's no stopover anymore. It sounds like it's predominantly going to be to North America and continental Europe. Qantas have told us that they're going to order 12 aircraft. Some research that I've done suggests that 4 is the right size of the number of aircraft to service those routes. So it'll be interesting to see if there's any difference between what the company can tell us they can do and what our research suggests.
Stay with me, Jacob. We'll be back in a minute. I'm speaking to Jakob Cakarnis, Director of Equity Research at Jarden Australia. Okay, so let's go into competition, and I'll come to Virgin at the end of it. But we have had we know the Qatar story. We've seen Air India recently talking about it, that they don't seem to have slots or anything as yet. We also, domestically, we see Rex and Bonza having failed or gone into administration at least. What's the competitive environment like on the international flights and then on the domestic flights at the moment? And what's it mean for customers like me and you?
International's probably where we're seeing the most value at the moment, Sean. I think in terms of a retracement back to more acceptable levels for a business class airfare, gone are the days of paying 20,000+ to fly at the front of the cabin, which is exorbitant. And equally, it's good to see flights again under that $2,000 mark. So there is value in the international cabin. What's driving that? There's a lot of competition coming from the North American airlines, particularly United, as they partner with Virgin. I think equally we're seeing Qatar come back into the Australian market. You would have seen that Singapore Airlines is trying to look to solidify its slots out at Western Sydney Airport. So internationally has always been a challenge for Qantas. How do they compete? They've got a largely US dollar cost base there, given that fuel, the predominant input cost, is in US dollars for Qantas. But equally, if you were to speak to Cam Wallace, he says we're no longer pursuing some of those vanity routes. And I think where Qantas has got into challenges historically is it's trying to be everything to everyone and participate as a big boy on the global stage. But I think now they've really shrunk to their core, and where do Australians want to travel, and focusing on that better.
Okay. What about Virgin? We've been talking about the IPO probably ever since it was taken over by PE, certainly in the last couple of years. Plenty of reasons why it hasn't gone ahead, so no value judgment one way or the other. But do you think it's competitive enough at the moment, and do you think there will be a float eventually?
Competitive, definitely. There were still a few issues. The pilots EBA is a great example, just in terms of solidifying what are they bringing to market in terms of not only a story for growth, but also making sure that the core of the business is functional and operating where they can generate sustainable returns for all of their stakeholders. And I know that sounds like a really political answer, but you've got to consider staff are really central to a successful IPO, obviously the government, and then Virgin shareholders. So solidifying that's obviously really critical. There's been questions around the market about whether or not Qatar actually comes in for a stake in that IPO. I only follow along in the press like you guys do, but it's been one thing that's been in and out, I guess, in terms of like a hokey pokey of how we get to the market for the IPO story. But equally then, I guess it's also been hamstrung by Qantas's lack of share price appreciation. So like I said, on those valuation metrics that investors typically look at, when Qantas is trading at a depressed valuation multiple, it's very hard for Virgin to go and give a story to the market of a justifiable level for a float that would be attractive to the company and also to anyone participating in that float.
Jacob, that's a very diplomatic answer. So don't hold your breath, but don't actually say it's never going to happen. I think that's what you just said. Is that right?
Look, I think I noted to you in this program before, Sean, I'd see it very, if not highly unlikely, that an American private equity firm's a long-term owner of Virgin. And I think we have to agree that the core of that hasn't changed. We are in seemingly probably the most unstable demand environment moving forward. Virgin so far are very rational in how they've been acting. And I guess from a consumer perspective, at least, we're seeing improvements in on-time performance. I know that you noted off the top that there's been some air price inflation. I think that is right. It's around commensurate with what we're seeing on fuel costs, I guess, as we get deeper into calendar 24, that's going to change. So yeah, it'll be interesting to see the market dynamics as it plays out. But so far it's rational, and that should provide a good enough market setting for Virgin to list.
One final question. What about external factors like left field things? I mean, a pandemic is a great example, but let's pretend we're not going to have a pandemic in any time in the near future. I suppose I'm thinking more about ESG and sort of pressure on airlines to become to release less carbon into the atmosphere, those sorts of things. Are there any of those things that you think we should be keeping an eye on in the next 2 or 3 or 4 years? Kind of the left field stuff. It's not just about how much someone pays for a seat and how much oil is. It's kind of beyond that a bit.
Yeah, I'm just nodding in agreement as you sum that up. I think one of the biggest issues facing all of the global airlines at the moment is the issues for Boeing and Airbus and also the parts manufacturers. It's this rare moment where you've got a genuine constraint of physical aircraft supply. They can't get them off the production line quick enough for where the airline demands are. So the impacts of that are twofold. One is it's holding back more efficient aircraft. So the new generation of aircraft are highly fuel efficient. They also have a cabin configuration that work for the airline's unit economics, and we're just not seeing that come through yet. So that's probably holding us back as an industry generally. But then also genuine safety concerns. I mean, Boeing and the MAX fleet of aircraft, we've seen a number of issues with them, even in developed markets. Obviously, developing markets have issues with their maintenance and some of the engineering prowess that they have, but seeing issues in the US market, particularly around safety, is a massive constraint for the industry. And in terms of confidence to fly and confidence for consumers to spend that money that they're being asked to pay at the moment, you'd have to say safety is probably at the forefront, Sean, of an issue holding back the industry.
Fantastic. Jacob, thank you for talking to Fear and Greed.
Thank you, Sean.
That was Jakob Cakarnis, Director of Equity Research at Jarden Australia. This is the Fear and Greed business interview. Remember, this is general information only, and you should seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.